Welcome. It's Tuesday morning on the floor of the New York Stock Exchange. I'm here with Mark Otto, is Managing Director for J. Stryker and Company. Mark, thank you so much for being with us.
Thanks for having me back.
So, Mark, another day, another record for the S&P 500. It's a big week. We have to understand where is this rally going. We have a lot of economic data. We have the Federal Reserve starting at two-day meetings today. A lot going on. What do you think the market will react?
Well, it seems as though this morning with the macroeconomic data that came out, bad news is good news. You know, there's some disappointment. I think that most of the focus was on consumer confidence, which was a miss. So I think that it
The lowest in 6 months.
absolutely, but it's bad news is good news because most people think the QE3 will actually be extended because of it.
Yeah, and a lot of people are talking about March, about other people are talking about June. Yeah. That means that we have unlimited liquidity for a few more months.
Absolutely. The market's been resilient. However, it's really been stoked by the fuel QE3. So anything that actually extends it is going to extend the rally.
Yeah. So now let's talk about the earnings. Earnings have been moving the market, but not so much. Just, maybe for sectors or maybe for, some shares each and every day. What can we say about the earnings season that just is about to be completed probably in a few days? Earnings beat expectation, and also in a few cases revenues, but we see the same trend.
Absolutely. It's the same trend that we've seen before. 77% of them beat bottom line. However, they're beating the estimates. Revenues they're missing on, and forward-looking guidance is continuing to look ugly. I think going into Q4, people are going to definitely be concerned with the government shutdown and its impact on the economy.
So now, Mark, you follow a lot of foreign shares here on the Florida New York Stock Exchange, a lot of Chinese stocks, and you have noticed a big sell-off in the last day. There might be an impact on IPOs, on future IPOs for Chinese companies.
Absolutely. There's definitely some concern. We have to rewind back to 2010. There was a lot of muddy water reports on China-based US companies. Several of them had to delist, but it cast a shadow over all China-based US companies at that time, which got pummeled. So Muddy Waters came out again. They accused NQ Mobile a few days ago. The stock fell more than 50-60% over the last couple of days. However, one thing that I've seen that's a phenomenon is, these China-based US companies have done really well this past year. Particularly the e-commerce and the solars have skyrocketed. I think it's due to the fact that the Dow and the S&P 500 have climbed up to such high levels that they've been a great alternative investment for portfolio managers over the past year. So we are seeing a lot of money exiting these stocks over the past couple of days. Yesterday alone, the e-commerce and solar stocks, some of them were down 10 to 20% yesterday alone. So 58.com is going to be actually IPOing on Thursday. So I think it's going to be a little bit of a worry about how their performance is going forward. And if all of a sudden, I think that more traders are getting more skeptical about China-based US companies.
So it's definitely going to be a test, for a future trend on the IPOs.
Yeah, I mean, Thursday is also Halloween here, so let's hope it's not a witch hunt.
Now let's talk about the S&P 500. Right now we are at 1767, Mark. 1800 is approaching.
Yeah, definitely. I think you have to put that as resistance level on the horizon, both psychologically, and it may just gravitate towards that if we get close enough. However, at these levels, 1768 is a level, 1758, 1754, and then 1748 for support going down. Between here and 1800, you're going to hit 1782 and then 1793, and then boom, you're right there.
Very close. So now we were talking about the Federal Reserve. The meeting is started today. Tomorrow, probably you are not going to have any surprise. But do you think that the Federal Reserve might just hint of what they might do at least by the end of the year?
Yeah, I think that tomorrow, 2:00, they're going to have their statement. I think that most traders are going to be looking at the wording, seeing if there's any revisions, seeing if they could read between the lines to see if anything has changed dramatically or is a tell sign of what's to come. More than likely, they're going to gravitate more towards the government shutdown and its impact to the economy, though, I suspect.
Yeah. We'll see. Thank you very much, Mark, for being with us.
Thank you.
And thank you for watching.